In 2020, the United States did something that would have destroyed almost any other country on earth. It printed roughly $3 trillion in a matter of weeks. Not over a decade, not over a generation, weeks. And then it did it again and again. By the end of that year, the Fed had injected more money into the economy than it had in its entire history combined. The stock market went up. Home prices went up. People received checks in the mail. Now here's the part nobody talks about at dinner. Zimbabwe tried something similar in the early 2000s. They printed money to pay their debts, fund their government, cover their deficits. Sounds familiar, right? By 2008, their inflation rate was 89 sextillion%. That is not a typo. Bread cost billions of dollars. People carried cash in wheelbarrows. Not because they were rich, but because the notes were so worthless, you needed a pile of them just to buy a loaf. Same action. Radically different outcome. So the obvious question, the one that should bother you, is this. Why does printing money make America richer and Zimbabwe extinct? The answer is not what most people think. And once you understand it, you'll never look at the global economy the same way again. Let's establish something first, because this matters. Every government on earth has debts. Every single one. And every single one has, at some point, looked at those debts and thought, what if we just made more money? It's the oldest temptation in economics. And for most of human history, it ended badly. But somewhere in the 20th century, something shifted. A small group of countries, mostly wealthy, mostly Western, discovered that they could print money, run massive deficits, borrow at near zero interest, and largely get away with it. Not forever. Not without consequences. But well enough, long enough to make everyone else furious about it. This is not a story about financial genius. It's a story about power, about the architecture of the global financial system, who built it, who it serves, and why the rules are different depending on where you're standing. And right now, with inflation still haunting households across the world, with countries in Africa, Asia, and South America, watching their currencies crater while the dollar holds firm, right now is exactly the moment to understand why this system works the way it does. Because it was designed this way. Here's the core idea, and I'll keep it simple. When any country prints money, it increases the supply of that currency. More supply, same demand, value goes down. That's inflation. Basic economics. But here's what changes everything. Demand. If people around the world want your currency on not just your citizens, but foreign governments, foreign banks, foreign companies, then you can print more of it without the value crashing. Because global demand absorbs the extra supply. Think of it like a restaurant. If you double the number of tables but the line outside is still around the block, you're fine. But if the line's already empty, adding more tables just means more empty tables. The United States has the longest line in global economic history. And the reason is two words. The dollar. After World War II, the world sat down at Bretton Woods in New Hampshire and essentially agreed. The dollar will be the global reserve currency. The anchor. The baseline. Every other currency will be measured against it. Oil is priced in dollars. Most international trade is settled in dollars. Foreign governments hold dollars in their reserves. If a Brazilian company wants to buy goods from a South Korean company, they often settle the deal in the dollars. Two countries, neither of them America, using America's money. This creates something economists call seigniorage privilege, the privilege of issuing the currency the world depends on, which means the United States effectively exports its inflation. When it prints more dollars, those dollars flow into global trade, global reserves, global markets, and the inflationary pressure is distributed across the entire planet, not concentrated at home. America prints. The world absorbs. That is the machine. And it has been running for 80 years. Now here's where it gets interesting. The US national debt is currently over $34 trillion. That is a number so large it genuinely has no meaning to the human brain. If you spent $1 million every single day, it would take you roughly 93,000 years to spend $1 trillion. And yet, the US government borrows at relatively low interest rates. Countries line up to buy US Treasury bonds, essentially to lend money to America, because holding dollar-denominated assets is considered the safest thing you can do with your money. This is the part that sounds like a magic trick. And in some ways it is. The US can borrow cheaply because the world trusts the dollar. The world trusts the dollar because the US is powerful. The US stays powerful partly because it can borrow cheaply. Around and around it goes. Economists call this an exorbitant privilege. The phrase was actually coined by a French finance minister in the 1960s, who, as a complaint, France was furious that America could run deficits, print dollars, and effectively make the rest of the world pay for American spending. Nothing has changed. Now contrast that with Argentina. Argentina borrows in dollars, not pesos, dollars. Why? Because no foreign creditor trusts the peso enough to lend in it, so Argentina takes on debt in a currency it cannot print. When Argentina's economy struggles, it can't inflate its way out. It can't print dollars. It has to earn them through exports, tourism, foreign investment, all of which dry up when the economy is struggling. So the debt grows, confidence drops, the peso collapses, and suddenly the country is in a crisis that feels impossible to escape. Which it essentially is. That is not incompetence. That is the structure of the system pressing down on a country that doesn't have the leverage to push back. Here's the irony. The advice that wealthy countries give to struggling ones: cut spending, balance your budget, don't print money, maintain fiscal discipline, is advice they themselves have never followed. The United States has run a budget deficit almost every single year since 1970. Japan has a debt to GDP ratio of over 250%, the highest in the developed world, and it has not collapsed. It has not even come close to collapsing. Its interest rates were near zero for decades. Meanwhile, a country like Ghana or Sri Lanka runs a deficit that would look modest by American standards, and within months it's facing a currency crisis, an IMF bailout, and austerity measures that gut public services. The difference is not discipline. The difference is the currency they use, the institutions that back them, and whether the global financial system was built with them in mind. It wasn't. The rules of the game favor the countries that wrote the rules. That's not cynicism. That's just the structure. So where does this leave us? The dollar's dominance is not permanent. Nothing in economic history is permanent. The British pound was once the global reserve currency. Before that, the Dutch guilder. Empires rise. Systems shift. There are already cracks in the architecture. China has spent years building alternative trade networks that bypass the dollar. The BRICS nations have floated the idea of a shared reserve currency. The rise of digital currencies, whether government issued or decentralized, Nagy raises genuine questions about what the next monetary order might look like. But here's what gets missed in those conversations. Replacing the dollar as the global reserve currency is not simply a financial event. It would require the world to agree on a replacement, on something they trust more. And trust in economics is not built with announcements. It's built over decades, through stability, through institutional credibility, through being the place people run to when everything else is falling apart. The dollar has had that role for so long that even the people who resent it still use it, still hold it, still price their oil in it. That is an extraordinary structural advantage. And dismantling it, if it happens, will be the most consequential economic story of the 21st century. So back to our original question, why can the United States print trillions and survive? And why does the same action in a weaker economy produce collapse? Because money is not just a number, it's a promise. And the value of a promise depends entirely on how much power stands behind it. The global financial system is not a neutral referee. It is a field tilted toward the countries that built it, and those countries have spent 80 years making sure that tilt works in their favor. That's not necessarily evil, but it's not fair either. And the question worth sitting with, the one nobody at the top of the system really wants answered, is this. What happens to a world order built on borrowed money, borrowed trust, and a promise that has never actually been tested all the way to the edge? We don't know yet, but we're probably going to find out